Hey friends, I have a deep value dividend stock that I want to cover in the video today. This is a stock that I don't own right now, but is on my watch list. I'm thinking of adding it soon. I have one of my corner patrons to thank for this because my patron was asking me, hey Ian, it's been a while since you've looked at this stock. What do you think about it? So here I am in Toronto, Canada, and on my way over on the airplane, it was 2 flights from Idaho. I spent probably about 4 or 5 hours analyzing this company. And so this is going to be a fun video. I want to go through my analysis. Before I do that though, today is a really special day. Tomorrow is going to be even more special. I am here in Toronto, Canada. I'm at the Blossom Social Investor Tour. This is their flagship event. I will be speaking on stage tomorrow with my friend Adriano from Passive Income Investing. We are going to be co-presenting on a panel. We're going to be speaking about the topic of income investing. We're going to go up there in front of 1,400 people. I cannot wait. And I hope if you're watching right now that I have an opportunity to meet you here in Canada. And if not, I'm also going to be at Blossom Investor Tour Chicago on October 7th. So I'll link to that in the pinned comment below. If you can't make tomorrow's event, Chicago, there are still tickets available to my understanding. And so today was a special day though, because I had an opportunity to meet the one and only Brandon Beavis and his amazing father, Marc Beavis. Here we are, we're on the stage here. This is everyone getting set up for the big event tomorrow, the Blossom Social Investor Tour. And if you don't know, Brandon Beavis is one of the icons of investing on YouTube, and he is one of the co-founders of Blossom Social. His dad, Marc, is amazing as well. I know Brandon all the way back from 2018. I will link in the pinned comment below to a video I did back then. I shared my top 5 favorite YouTube channels at the time, and Brandon's was certainly prominently on my list. He is the kind of guy over the years that just kind of pays it forward. And so I am a big advocate, a big fan of Brandon, of Blossom Social, and I'm so happy to be here to speak to the amazing audience. But boy, what a milestone event for me today, meeting these 2 icons within the investing industry. Also today, it was really special. I had Starbucks this morning with my friend Deepak. Deepak, shout out. He is one of my patrons as well and has been a supporter of this channel for so many years. We had a great conversation. I think we were there for about 2 hours talking about dividend stocks. And so it's been a really exciting day, a really special day. And tomorrow it's going to be a lot of fun as well. But I know for all of you who can't make the event tomorrow, I still want to get my YouTube video live. And so here goes. The stock I want to discuss today is called Viatris, ticker VTRS. Some of you may recall in the olden days, I used to own this stock and I covered it here on my YouTube channel. When I had to sell stocks a few years ago to raise some funds for a real estate transaction, Viatris was one of the stocks that got sold. And I honestly hadn't looked at it for a while until one of my patrons asked me, Ian, take a look. You've been buying Pfizer. Why not look at Viatris again? What do you think about it? And so I analyzed this thing. It's solidly back on my watch list right now. So let's just start out, I guess, with some of the news with Viatris. As you can see on the screen in front of you right now, the first slide that I want to share goes through their Q2 2025 results. I have a lot of slides today, and so I'm going to go through them pretty quickly. The first thing that I want to share on this slide is that they delivered total revenues above expectations, which is reflecting the strength and the resilience of their global business. They have positive results from 5 phase 3 data readouts. I want to talk about that a little more. They returned more than 630 million capital, including share buybacks, and they gave guidance. Okay, a lot on this slide. You may recall a number of years ago when I covered Viatris, just the backstory, what is this thing? Well, it was Upjohn was spun out of Pfizer. It was combined with Mylan, which was an existing publicly traded company, a generics business, to form Viatris. Mylan, to my understanding, had a lot of debt. When Upjohn was spun out of Pfizer, it had a lot of debt. And back then they were doing a number of things. They had divisions in the business, such as generics, biosimilars. They had women's health. They had a number of other businesses under their umbrella. Worth noting, they went through a multi-year restructuring where they sold off divisions of their business over the last few years, and they did these divestitures to lower their debt stack. They had a lot of debt when they got going as a publicly traded company, and so they sold off their women's health division. They sold off biosimilars, and they sold off some of their other businesses as well. But on the last slide, what you saw were some notes about phase 3. So what does this mean? Well, Viatris is a generics powerhouse, but generics don't have a lot of a defensible moat. This is a business of operating at scale. I think they have 1 billion patients in their network each year that they're serving through their system. And Viatris produces and distributes these generics. And that's a kind of business that's like an annuity model, and it's kind of a cash cow. It's driving a lot of profitability and free cash flow, but it's shrinking a bit over time. And some of that, of course, the shrinking is because of the divestitures as well that they use to bring down their debt stack. But they got into a new business, and the new business is they are buying drugs that are in phase 3. These are certain drugs that have promise of getting approval from the FDA. And so these phase 3 drugs that have a lot of promise, this is a new line of business to my knowledge, and what they're doing is opportunistically with their cash flow, their abundant cash flow that they're using to pay dividends and that they're using for share buybacks, that they're using to reduce debt, they're also buying some opportunistic phase 3 drugs with the hope they get approved. And if they do, then they're going to be on patent protection, to my understanding, and that could help defend and even grow the business over time. So they're going from a period of shrinking, possibly into a period of growth. But that's a lot. I want to keep going because I did so much research on this thing. As you can see on the screen in front of you right now, next slide, I want to go a little quicker on some of these. Capital allocation. They're just saying on this particular slide, and I think it's important, that returning capital to shareholders is important to them. Share repurchases are important, and I think those repurchases are really important to keep EPS strong, because earnings are going to go down over time because of the divestitures, and that was important to reduce the debt stack. But the share repurchases are important because with fewer shares outstanding, they can keep EPS, earnings per share, really strong. Also, dividends. Dividends are very important to this company in terms of their capital allocation. And the starting yield right now is just below 5%. It's a qualified dividend. That is a range that makes me, as an income investor, very, very happy, because it's higher than my portfolio average, and that is really valuable yield that I can use right now. Now, let me tell you, let me take a step back. This stock is on my watch list. If I do go ahead and initiate a position, if I go ahead and do that, this will be an ancillary position like it was before. But up around 5% yield, that helps boost my portfolio average, and that is a meaningful income to me. And so something to think about. Now, something else also, while it's on my mind, I'm skipping around. This has been a big day for me, so bear with me here, everyone. I didn't script out this video as much as I usually do. It's been a big day for me. But anyway, Viatris, why I like it right now is I think it really ties in to the current narrative in the healthcare industry in the United States about Make America Healthy Again. Part of that whole initiative is also to reduce healthcare costs. And some of the companies I own, like Pfizer, for example, which have drugs that are on patent, can sell those drugs for a lot of money. And there has been talk, hey, are these being sold for too much? Are they extracting too much value from the insurance companies and the consumers? Only time will tell. Viatris, I believe in our current climate, is a good hedge against that because they sell generics. And that's their primary business. Generics are cheaper in nature. They're easier, they're more affordable, they're more accessible to everyday people. And that's an important narrative. That's an important business strategy that works within the current political climate. And so I do like that about Viatris, and that's why I would also consider adding it to my portfolio. But I want to keep going. As you can see on the screen in front of you right now, the next slide is about the divestitures. I already talked about this, but like I said, they sold off a number of businesses. They kind of had a two-phase plan. I looked through their annual report. I looked through all kinds of press releases and financial releases. And basically what Viatris had been saying is, hey, we're going through two phases here. We're going through phase one of divestitures, and then we're going to refocus and go into phase two, which is kind of stabilization and growth of the company. And this is just one example of bringing completion to all previously announced divestitures. And so that's pretty cool. Next slide that I want to share with all of you goes into their financial guidance. When I analyze stocks, I'm going to share my analysis today. I like to use information that I receive from the stock analysts, and that's all available easily on Yahoo Finance. But also what I like to do is look at what the company is telling me. And so as you can see on the screen, this is just an example of what the company is telling me right now. Viatris is saying, hey, right now, this is what we expect. And this is very valuable data. In particular, I like to look at the adjusted EPS. I think that gives me a really helpful data point. And I can compare this versus some previous data that I have when I used to analyze this stock about 3 years ago. And so that's something actually I did in the analysis. You're going to see later in the video today, I have some comparisons where I look, hey, where are they now versus kind of back around the time I was buying them when this company was kind of newer to the public stock market. All right, next one, as you can see on the screen in front of you, are some financial releases. And so the first financial release, I want to go pretty quick. This one is the consolidated balance sheets. This is for Q2, and it basically gives the balance sheet as of June 30th, 25, and it shows it as December 31st, 24. I don't want to spend too much time here, but I want to take kind of a big insight from each slide. And the big insight I have on this slide is look at long-term debt, and you can see long-term debt has gone from 14 billion at the end of 24 to 12.79 billion as of June 30th, 25. So in just half a year, they have removed another, say, 1.25 billion from their long-term debt. And so that's something really important to me when I've looked at this balance sheet over time in an environment. Yeah, the Fed funds rate has gone down a little bit, but the cost of debt is still high. It's higher than it had been. And seeing them reduce that debt over time gives me a lot of comfort that they're executing on their business strategy. Next slide is the income statement. You can see on the screen in front of you right now the income statement. There is probably two takeaways I have from this. The first takeaway is that sales are dropping. The reason sales are dropping is because of divestitures, but also I do believe that their generics business in general is the type of business that would probably slowly shrink over time because new patent protected drugs come to market and consumers and patients start using those, or they're prescribed those instead of the old generics. And so over time, and what I would say is generics are generics. So there's no patent protection. So it's a competitive market and they face competition from other producers in the market. And so whoever can operate at the best scale and the best efficiency wins that game. But I would expect revenues to go down over time even without divestitures. And that's why I kind of look at this as an annuity model, or in real estate terms, almost like a land lease deal. But with the new phase 3 drugs that they're buying, that could help stabilize revenue over time. But that's going to be a metric really important to watch in the coming 2, 3, 4, or 5 years. Can they stabilize revenue? The other thing I would say overall is most of the metrics on here are negative, and the reason for that is they take some non-cash impairment charges, which we're going to see next on the statement of cash flows. And so honestly, it's really difficult to look at their income statement. And sometimes I get comments on my videos like, hey, Ian, how could you even look at this? This company is losing money. Please note that just because earnings per share are negative does not always mean that a company is losing money. What it sometimes means is the gap EPS, it's just thrown off by non-cash charges. And that's what's happening in the case of Viatris. As you can see on the screen on the statement of cash flows, you can see some of that. The big insights from the statement of cash flows are actually several-fold. First and foremost, you can see, let's just look at the top. They're losing money. So basically net loss. But after we kind of adjust for all of these items at the top, you can see that the cash flows from operating activities are positive. And yes, they're going down over time, which again speaks to the points I just brought up. But how do we go from very negative over the last 6 months to very positive? Well, what you see first and foremost is there's depreciation and amortization, which are non-cash charges that are added back as a positive number. You can also see a major impairment of goodwill of 2.9 billion, which is added back. That's a non-cash charge. You can see an add back of 726 million of other non-cash items. Long story short, there is a positive, a very positive net cash provided by operating activities, which in the last 6 months ended June 30th, 25 is about $755 million. Now, also what I want to show on this particular slide is, can they cover the dividend? Well, if we go further down this slide, which has a lot of data, you can see cash dividends paid over the last 6 months were about 283 million. The reason it's lower than the 6 months in the prior year is because share count has reduced. So they're buying back shares, which means less aggregate dividends are paid, but it's the same dividend per share. Over time, I think the dividends could go up, but right now their strategic focus seems to be paying down debt, which I think is important, and also buying back shares. But you can see that actually over the last 6 months, they bought back about $350 million worth of stock as well. But the dividend, 283 million, is clearly covered by the 755 operating cash flow. And you can see so far, based on this particular slide, it appears they're doing just fine from a statement of cash flows perspective. So what I want to do next in this video is I want to go through my analysis. I broke this down on Excel on the plane over here, and that's the last slide that I want to share with all of you. So as you can see on the screen in front of you right now, this is my Excel analysis right now of Viatris in 2025. And I have all my normal metrics on the left-hand side. You can see it's at $9.90 a share. It's down 27% from the 52-week high. And based on forward analyst estimates, you can see that the forward PE for 25 is a 4.36. Based on company guidance, which is what I put more weight on, it's a 4.44. That's why I highlight it. And next year, analysts are expecting a 244 earnings or 4.06 PE. So really low PE. Dividend is 4.85%. Payout ratio is only 21.5%. Market cap is 11 billion. So that's the left-hand side of the screen. But on the right-hand side of the screen, let's look at some real interesting comparisons. So I looked at the videos I did a number of years ago, and I'm going to link to those in the pinned comment below. And in my original video, which was around the time they spun off from Pfizer, the price per share was $15.54. So just a fun comparison, we're down about 36% from then. So obviously the stock is a bit cheaper. About 3 years ago, I did a video, and I did a video that said, hey, Viatris has tanked to unreal levels. I'm going to link to that video in the pinned comment below as well. At that point, it was at $10.20. We're only down about 3% since then. So we're kind of back to those levels from 3 years ago, a little lighter. So another thing I want to share is 3 years ago in that video that was kind of talking about how it tanked to unreal levels, I also had some data in there. I had the EPS estimates for 2022 and 2023. You can see back then the EPS estimates were $3.48 for 2022, $3.45 from 2023. It placed the forward PE at that time below 3. Now, what's interesting is let's look at on the left-hand side, the EPS estimate right now is at 2.23. So our earnings per share on this company over time went from the mid $3 range to the kind of mid to low $2 range. And so the EPS erosion is real. And I think if there's one particular risk with this company is, will this plan pay off? And is it priced? How is it priced as compared to the risk that it carries? I think with a forward PE in the 4s, the risk is priced in there. But the question is, can they stop the EPS erosion? And can they lessen that EPS erosion? They had a 2-phase plan. Phase 1 was the divestitures. Phase 2 is now stabilization and resumption of growth. And I think the growth comes from those phase 3 drugs that they're acquiring and having just less debt, holding them down. But only time will tell. And that is the risk that any investor is making right now if an investor chooses to buy Viatris. It's on my watch list. I'm thinking about it. As you can see on the screen, I want to go through one more thing. One of the most promising trends with this particular company is the debt is going down over time. So on the right-hand side of the screen at the bottom, I show how the debt is reducing over time. And the debt is down about 29% from December 31st, 2022. So on December 31st, 2022, it was at 18 billion. And now, as of 6/30/25, it's at 12.7 billion. And so the long-term debt has gone down over the years. And the reason it's gone down is they've used the divestitures to pay down debt over time. And that's been a winning strategy, in my opinion. I think the company is much better off now at $12 billion debt, 12.79. But in my humble opinion, I'd want to see the debt get down even more. I'd love to see them pay this debt down maybe to even $8 billion or maybe even down all the way to $6 billion. Rather than raise the dividend over time, I'd love to see them pay down debt. So let me take a step back. Viatris, a really strong company in the generics business. And they have a lot of cash flow coming through. They can support their 5% dividend right now. That being said, they have EPS erosion. Have the divestitures and their change and evolution in business strategy been enough to slow that down and hold the line on EPS going forward? Only time will tell. If they can just hold the line on that EPS at a PE of 4, I'm fine with that. This isn't the kind of stock that I'm looking for much growth, but at a 20% or so payout ratio, if they can get their debt down, they can hold the line on EPS, there's a lot of room to get this dividend yield up to, say, a 10% over time. But the single biggest risk, in my opinion, is they're in the generics business. They have a lot of debt and the EPS has been going down. So put in the comments what you think about Viatris. Is this a stock you would consider for your portfolio? I'm certainly considering it for mine, but it's on the watch list right now. Before I go today, please go ahead and click the like button. It means the world to me. I'm kind of here in Toronto. I've got a lot on my mind. I am so excited about everything going on right now. And in the pinned comment below, by the way, I'm going to include my affiliate link to Blossom Social. If you sign up, I am compensated, but it's free to get started. I think I have now like 40,000 followers there on Blossom. At the pace I'm going on Blossom, which is the social media app for investors, it might be as big as my YouTube channel someday. And so I'm really excited when I'm not on YouTube or on Patreon, I'm on Blossom. So I have a link to that in my pinned comment below. And in terms of full disclosure, I'm an affiliate of Blossom. I'm also long Blossom. If you did enjoy the video today, also I invite you to subscribe. It means the world to me. It's the best way you can thank me for sharing these videos with all of you. Last, before I go, in terms of a full disclosure, in addition to being long Blossom, I'm long Starbucks, ticker SBUX. I'm long Pfizer, ticker PFE as well. Also, before I go, in terms of a friendly disclaimer, today's video, it's not investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for fun and entertainment. It's possible to lose money in the stock market. Before you invest, please consult your licensed investment advisor first. I'm just sharing my journey for fun and entertainment. And as always, in the description below, I have additional disclosures, disclaimers, and in the pinned comment below, all kinds of cool links, including my Blossom affiliate link. I love you all. Thank you for your support, and I'll see you all in the next dividend stock investing video.